Good morning, everyone, and welcome to our webinar for Crunch the Numbers. We've got a fantastic lineup today, and I thought I'd just welcome you all to the webinar first of all. My name is Matthew Rigby-White, and I'm the owner-director of Square Media. Just a few etiquette things around how the webinar will work today. We've got a Q&As function within Zoom. You should be able to see that in the controls. If you click the Q&A button, you'll be able to ask any questions, which we'll get to at the end. There's also a chat feature if you feel the need to, if you'd like to send any messages to ourselves as panelists or to everybody else. We're hoping it will take less than an hour and a half. And we do aim to be done by 11:30. We plan to keep it simple and highly effective, and Ben's going to really break down the Chancellor's budget announcement and everything that it has within it. You will be sent a copy of the presentation afterwards, along with sort of an introduction email, so you've got our contact details. You will have an opportunity to book a consultation with either Steve or Ben. And Ben has said that he's actually around until 2:30 today to take any questions afterwards to discuss your specific circumstances and how the budget might affect you. As I mentioned, there's two main speakers today, Steve Rees from Square Media, who's our commercial manager, and Ben Matthews, who's a partner at Elsby Co. Firstly, I'll just introduce myself. I started Square Media back as a one-man band in 2013 from a small desk with a cupboard in a cupboard under the stairs, quite cliche entrepreneur. To date, we've grown to more than 14 strong, and we've got an even wider network of contract resource that we work with. The business itself has been doubling year on year over the past few years. What's really important to me is that our business has grown because our clients and our partners have grown. I'll get into it in a little bit more detail, but we really do work to partner with our clients, and we become an extension of their team, and they know us intimately and know the people in our business. I set up the business with one clear vision, and that was to offer all the benefits of an entire marketing team without the overheads and hassle of building one internally. So the best way to think about us is we're a full marketing team that can act for your business. The business itself, it's called Square Media, and our slogan, our tagline is your outsourced marketing team, because that's what we do. And in short, we're a team of creative marketers, designers, and programmers launching your business potential without the overheads. And there's just some of the services that we offer internally, or supplemented with local contract resource that we've negotiated. That's enough from me and about Square Media at the moment. I just want to introduce Ben and why we've got to where we are now, why we're doing this webinar. So we've been working with Ben almost since the outset of the business when I first set it up from Elsby Co, and we've worked together for a number of years now. We decided to partner together because we've recognized that a lot of the businesses we work with, when we go in and talk with them, we often we're able to provide lots of advice and support with marketing, but a lot of their issues are maybe in other areas as well, and so we can effect a really nice introduction with a network of partners that we work with, one of which is with Ben. And Ben also recognizes that there'll be a need for some of his clients to actually, in order to grow their business, they need marketing investment, and that's where an effective introduction to ourselves comes in. As I mentioned, Ben is a partner at Elsby Co, one of the Midlands leading accounting firms, and many of his clients are in the local Corby area. So I know a lot of people attending today are from the Corby area, so Ben would be your local contact at Elsby Co. So without further ado, Ben, if you can hear me.
I can. Hello.
Excellent, excellent. If you want, I think your video's off.
It says that you have stopped me.
Oh,
I won't take it too personally.
Bear with me. Okay. Okay. There you go. You should. There we go.
Good morning.
Thanks, Ben.
Thank you
Cheers.
very much.
I will let you take over.
Great. Thanks so much. So I'm just going to share my screen. So yeah, good morning. Can everybody, I think you should be able to see my screen. So good morning, my name's Ben. I'm from Elsby Co, as Matthew pointed out. Matthew and I have been working together since 2018, and it's always been a great pleasure to see Matthew grow and develop his business with his hard work ethic and great jobs that he's doing for his clients. Obviously, there's been the budget recently. I should probably point out that although it looks like I'm on a beach, this isn't a tax haven. I am sat in Corby in my home, working hard, I promise. So what I'm going to do is just go through the main points of the budget that's kind of relevant to you all. Some not so relevant, but just some good points. A quick Google this morning showed me that a letter from a good man, Benjamin Franklin, to Jean-Baptiste Leroy in 1789 said that there's nothing as certain as death and taxes. So I can't help you with death, but I can hopefully help you with tax. So without further ado, I'll move on to the second slide. So there we have the first bit of business. So CJRS, the Coronavirus Job Retention Scheme, has been now extended to September, which will be paying staff 80% up to the end of June. From July 2021, it will be reduced down to 70%, with the employer expecting to cover 10% of the cost. And then in August and September, it will be 60%, again, with the employer expected to cover the additional 20% of the cost. The employer will also have to cover any employer's NI and also any pension cost. So that's a good extension. It's obviously designed to help reduce any redundancies and all that side of things. So hopefully it works. We'll have to wait until September to see if there's any other changes, but hopefully we're out of coronavirus world and lockdown and all that good stuff. They've also announced the 4th and 5th SEISS grant, which have now pulled into that the people who have filed a 1920 return, providing it was filed by midnight on the 2nd of March 2021. They've extended some kind of rules in it, as you were. So it's only available to people who reasonably believe they've suffered a significant cut in profits in relation to COVID, that you've traded in 1819 and 1920. They want you to declare that you will continue to trade in and that you believe that you have suffered a drop. The bad news is that the grants still aren't available to direct to shareholder companies, as have been hoped, but there's no announcement there either. So that's purely for the self-employed people. They've set aside £5 billion for restart grants to boost the businesses post-lockdown. So that's a per premises thing, which is up to £6,000 for non-essential retail and up to £18,000 for leisure and hospitality. I believe that's based on your rateable value, and that is, like I say, per premises. The hospitality and leisure will also pay no business rates for 3 months from April to June, and then there'll be a further reduction for 9 months by 66%, which again is designed to help premises costs for those businesses. On to slide 3. So also in the hospitality sector, so this also includes things like attractions, restaurants, gyms, and so forth. They've maintained the 5% VAT rate, which has been extended to the end of September 2021, and then a further 12.5% until the end of March 2022, at which point it's anticipated it will return to 2020, 20% at the end of March 2022. Corporation tax is going to rise. So with effect from April 2023, any company over £250,000 will pay 25% in corporation tax. Any companies earning up to £50,000 will pay 19%, and then there's a marginal relief between £50,000 and £250,000, whereby you'll pay a smaller amount or a larger amount, sorry, as your profits go. what you've got to be really careful about there, and it's good that it's we've been given a bit of time to make sure we kind of take stock of this, is if you have associated companies. So an associated company is a company that's under the control of the same people, that divides that level by the amount of companies. So if there's, for example, a director who's got 4 companies, that £250,000 limit will be divided by 4, so just over £60,000 per company. So you've got to be mindful, if you've got 3 companies that's making a very, very modest profit, but 1 company that's making a large profit, that larger profit will be subjected to a higher rate of tax because of the limits being split between the 4 companies. So that's something that we need to review for all companies that have got several businesses, just to make sure that doesn't trap you. One of the things that they've introduced, this was here once upon a time, they've reintroduced it, is tax losses that were generated between the 1st of April 2020 to the 31st of March 2022 can be carried back 3 years. So if you've made a loss in the current financial year, normally the rules would be that you would either be able to carry it back 1 year against any trade profits of the same trade, or indeed carry that loss forward to any profits that you're then going to make later on. That's now been extended to 3 years of the latest. It's a good thing that if you've made profits obviously in the previous 3 years and then you've made a substantial loss as a result of COVID, it means that you can at least get those losses utilised against the profits that you've generated in the previous years. The big one that they announced was a super deduction. I wonder how long it took them to sort of arrive at that name, super deduction. The super deduction is any assets that you acquire from the 1st of April 2021 that would normally qualify for 18% written down. You're allowed to actually use 130% of that cost. So for example, if you spent £10,000 on an asset, you would get £13,000 offset against your profits. So it's obviously quite a good thing. What's included in that? So it's what's called plant and machinery. So to drill down on that, it is you've got the computer equipment, servers, solar panels, vans, some weird points that you're probably not aware of, electrical vehicle charging points. That's quite a buzz thing at the moment, whereby you get the, if you've got an electric vehicle, you can have the charging point installed at the office or at the work and get 130% allowance on that. Any refrigeration units, office chairs, desks, anything like that would all qualify for the 130% allowance. It's important, I'm just seeing a question there from Mr. Wilson. It's important to know that the super deduction is only available to companies. So it isn't available to sole traders or partnerships. It's only available to people who pay corporation tax. So that's not available to sole traders, I'm afraid. On to the next slide, if I can find my mouse. So onto a few more business bits. So 100% first year allowances for zero emission vehicles. So that's again electric vehicles. Now electric vehicles also are covered by the super deduction scheme as well, we're led to believe. So anybody looking to buy an electric vehicle from the 1st of April onwards would be a good idea to look at sort of holding fire on that. They also announced 8 locations that are named as what's called free ports in England. Now the closest one to us is the East Midlands Airport. It covers the airport and also an area of 45 kilometres around that, whereby that area gets special and also lower taxes as a result. And there's all sorts of quirks where if you import something, you pay a duty. If you then convert it into a lower product, you get to benefit from that. And there's all sorts of other things in there. So it might be worth, if you're manufacturing, importing, all that sort of stuff, it might be worth reviewing whether or not you might benefit from being in a free port. There's 8 locations ranging from, like I say, East Midlands Airport, some in Scotland, Wales, Northern Ireland, and at the ports that are available. Mr. Sunak also announced a recovery loan scheme, which is available from the 6th of April. It's available to anybody that's already had a bounce back loan and or CBILS loan. The minimum rates are £1,000 if you're taking either asset or invoice finance, £25,000 if it's a term loan or overdraft. There isn't any benefits like there was with the C-bills or bounce back loan, though, whereby the costs are due by immediately. The benefit of the recovery loan scheme is that it's given the government backing of 80% to the bank, so it reduces obviously the risk, but you are subjected to the usual application process with the bank and also the credit searches and what have you. So just be mindful of all that. So any high quality work placements and training that's provided to 16 to 24-year-old will be funded at a rate of £1,000 per trainee. So they obviously encouraging younger workers. Furthermore, new apprentices hired between April 21 and September 21 will receive £3,000 per hire. The government is for all 16 to 18-year-old apprentices as well. A few other little bits and pieces. If you wanted to provide COVID tests to employees up to the end of March 2022, that's also now tax-free. The working from home allowance is provided to employees, which can be provided either through the tax return or the employment deduction is also available, has been extended also till March 2022. So some personal things. The stamp duty land tax holiday, as anticipated, has been extended to the end of June. That's for any completions that occur for any values under £500,000 to the end of June. And then further 3 months up to the limit of £250,000 up to the end of September. Again, that's a completed sale. Furthermore, they announced a guaranteed scheme for any mortgages that are taken from the 1st of April 2021, with the government backing, allowing 95% mortgages. We're told that a lot of high street lenders have obviously signed up to that, and I think he said something along the lines of Virgin Money would then join the scheme. Obviously, we don't know yet the practicalities of it as to how easy it is to apply for it, and if it's whatever bits and pieces are in there. So that's just worth keeping an eye out if you're looking to move, or if you've got any relatives, sons, daughters that are looking to buy first-time houses, especially with the stamp duty. They've increased the personal allowance with effect from the 6th of April 2021 to £12,570, with the basic rate band also going up by £200, which means that you're in, before you go into higher rates of tax, you can earn £50,270. Now, obviously that's a good thing, but they've then frozen that until 2025-26. Now, what that essentially means, I wouldn't go as far as calling it a stealth tax, but as you would hope, profits would increase over that period of time, and what you look to take from your businesses, whether it be a self-employed business or a limited company, the more you take, the more it's likely to shift you into higher rates of tax, because the allowances aren't increasing in line with what you would hopefully increase your profit by. Now, worth noting as well that the child benefit rate is still frozen at £50,000. So previously, if you were a higher rate taxpayer, you would start to lose any child benefit that either you or your partner received. What this has done is essentially moved people still in basic rate bands, but also you then would also start to lose the child benefit, which I think is for every £2 you lose £1 of the benefit or something like that. So you need to be very mindful of that. The next slide. So 2 schemes that they announced, one of which was the Help to Grow for management. So this is available. There's 30,000 places available with effect from June for small businesses. They're going to be given access to a 12-week program. We've been told it's delivered by leading business schools across the UK, where you can combine practical curriculum with one-to-one support from a business mentor. It's designed to be managed alongside full-time work and heavily subsidised by the government. So the cost will be just £750, and it's available over a 3-year period. UK businesses from any sector can operate. It's aimed at finance directors, chief executives, decision makers, essentially, of the business. One of the key drivers was for any sector, you have to have been trading for a year and within 5 to 249 employees. Another Help to Grow scheme they announced also was Help to Go Digital, which is kind of works with where Square Media come in. So again, it's with effect from autumn. Eligible businesses will be able to access an online platform. They will also be able to get a discount of up to 50% of costs for approved software, which will be worth up to £5,000. Vouchers are initially expected to be available for software that helps businesses looking to build customer relationships and increase their sales, make the most of selling online, and also manage their accounts and finances digitally. So again, that would work quite well with either an accounting function or obviously the marketing function that Matthew and Steve will help you implement. All businesses will be able to benefit from free online advice on the platform, and it's restricted to 5 and 249 employees, and you have to be registered at Companies House, so either companies or LLPs. You've had to be trading for more than 12 months, and you have to have purchased a discounted software for the first time. One final bit that I just wanted to go through is some end of year tax planning. So anything like equipment purchases would normally be something we would discuss with a view to you buying now before your year end to get the annual investment allowance. But something you have to obviously bear in mind is a super deduction. I was talking to a client who's a contractor yesterday who's been out and bought a very nice £60,000 JCB. I told him I'd give him the advice on the proviso that he let me have a play with said JCB. He decided to defer the purchase of that JCB to next year because he wanted to get the super deduction. Now, there's obviously a cash flow impact on this, so you might want to take the annual investment allowance now to reduce your corporation tax now. You have to think about things like if it generates a loss, could you then carry that loss back by up to 3 years? So there's all sorts of different things that you need to play with in that respect. So that's where I'd be happy to chat through with you or give you some guidance on whether or not that might be better to buy something now or defer it. Equally, you might want to look at your marketing, your cost structure, if there's anything that you can pay for now. Pension contributions are an obvious one. You can pay up to £40,000 per year and also use any unused contributions and carry back. We've got a good friend of ours who works with both myself and Matthew, a chap called Conor O'Sullivan, who's a very good financial planner. He will give you some very sound advice, not just with pensions, but investments, life assurances, and all that type of thing. So it's definitely worth having a chat with Conor. Other good IFAs are available, I would imagine, as well. Marriage allowance. If your income for both taxpayers are within the basic rate, with one taxpayer is within the basic rate band, but the other partner does not use all of her or his personal allowance, you can pass on up to £1,250 of their personal allowance to that basic rate taxpayer. So that would save you £250. So that's worth considering. ISA allowances. So again, you've got up to a £20,000 allowance. Obviously, this is again where Conor comes in, looking at making sure you use your ISA allowances. Once the money's in there, you've used it. It's one of those things that it's good to get in. The returns may or may not be great at the moment, but obviously once it's in, you've used your subscription allowance. It's a good thing. And also gifting allowances. So IHT, so inheritance tax, you're allowed to gift money to relatives, friends, family of up to £3,000 a year. So obviously remove that money from your estate. CGT was heavily frozen. It was expected and anticipated that the rates were going to go up. That's not to say they won't go up. They will remain at 10 and 20% for usual gains, or 18 and 28% for basic rate and higher rate taxpayers for residential sales. Landlords were left fairly alone actually in this budget. It was anticipated that there would be some more changes, but after the stamp duty premium, the interest restrictions and all the other things that were targeted at landlords have been left actually well alone. So in that respect, that's a good thing. It is still expected that what was previously known as the entrepreneurs relief, the business asset disposal relief, would be changed. And also capital gains tax relief will go up. So again, that is crystal ball time. We need to factor that in at some point, but give some thought to that and well worth considering any changes that you might be looking to make, whether you've got a residential portfolio that you might want to either look to sell or perhaps even incorporate it into limited structure, obviously we can help advise you and guide you on that. And if you've got any questions, feel free to give me a shout. That's me done. So that's me, Ben Matthews. My number is on there and the email address. I'd be more than happy for you to email me, call me, text me, WhatsApp me, any questions, concerns, anything, any guidance you want. I'm more than happy to kind of give you that. Steve is going to then guide you through the marketing world. I'm going to go back onto my deck chair and hopefully bask in the sun that Corby has to offer. It's been a pleasure talking to you all. If you need anything, please let me know. Have a wonderful day and thank you ever so much indeed. Over to you, Steve. Can I hear you?
Great stuff. Yeah, Matthew, I need you to start my video, I think.
I've stopped sharing. That should be, is that you now?
Yep, that should be me on. Right, hopefully you can all see the screen. Well, good morning and thank you, Ben. That was really interesting. This hopefully will be a little less numbers driven, but hopefully thought-provoking. So I'm going to talk a little bit about setting a marketing budget, why and how you should do that. So sorry about that. So a little bit about myself. My name's Steve Rees. I'm a marketing consultant with 20 years experience in mainly sales and marketing, but I spent a lot of my time in the leisure industry, building health and fitness clubs and getting them open with members. During that time, I was put on an MBA course, which was helpful. I was the UK rollout manager for LA Fitness, so I needed to have sort of a grasp of the larger sort of business figures and scene. And I went on eventually to own my own health club here in Kettering, which I bought off an administrator. And by rebranding the business, we were able to grow the membership by 30% in the first year. Since selling it in 2008, I've been a marketing consultant, working with creative agencies, and obviously Square Media is an excellent agency in terms of providing long-term retained marketing services. So that ties in very well with kind of budgeting for marketing. So just make a start here. The image you can see here is a chap called John Wanamaker. He was a bit of a marketing pioneer. He was a massive proponent of advertising. And he came up with this famous statement. Many of you will have recognized this: half the money I spend on advertising is wasted. The trouble is, I don't know which half. And of course, in the 21st century now, with digital marketing and the facilities we have, that really should not be the case. However, sadly, we meet a lot of businesses and there are areas of their business that are not being tracked particularly well. So therefore, they can't see, the performance of the marketing they have going on. So that's something we very much look to help with and provide reporting and marketing support month by month. So a question we always get asked: how much should I put into my marketing budget? Well, of course, that depends on several factors, and we'll cover most of those in this presentation. If you look at the Chartered Institute of Marketing, they make a suggestion of around about 7 to 10% of turnover, but of course that has a bearing on other factors as well. To a lot of business owners and managers that we meet, I sense that is generally viewed as a bit of a cost, which is an expense, which is, I don't think, necessarily the right way to do that. There's more successful clients that we have and businesses that are doing well tend to see that as an investment, something they're going to get back, a return on their investment in marketing spend. And I think that's a good sort of mindset to adopt. So some people also, we get into this. I mean, why have a marketing budget at all? Many businesses approach marketing on a very ad hoc basis. They often respond to marketing needs, or they go with an opportunity that pops up. That might be a last-minute advert in a newspaper or an online advert. We've all been there, and very often that approach is problematic. Setting aside a regular marketing spend allowance or budget will allow you to obviously plan ahead, ensure that you're going to get the maximum return on your investment. Anything that's planned in advance has got to be better than just ad hoc. Ensure that you deliver consistent marketing, and that will have far greater effect. So it's far better to have a drip feed of marketing going out than to have sort of your marketing in fits and starts. So that could be planned out over a year. Obviously, you can make more informed choices, identify your target audience and what channels to particularly use to reach your audience and what message you want to get across. So of course, having that on a plan is an important thing to do, and you can do that with a content calendar, and that can be planned out for everything from blogs to email to social posts. And of course, it can also be adjusted according to seasonality or other factors that impact your business, where it might be a big exhibition or something coming up. Lots of exhibitions in September traditionally. Obviously, things are a bit different now, but hopefully this year we'll be back to normal. Also, you can avoid unexpected costs. So, spend is agreed in advance, it's budgeted for, and then what you've got to do. And of course, if you have a marketing manager or you have an agency like Square Media, we can agree obviously that budget on an ongoing basis. And of course, one of the important things to do is to make sure that, having taken a few ad hoc choices and then burnt up your budget, you don't run out of money halfway through the year, which is obviously not helpful. So businesses without a budget tend to market themselves on a sort of stop-start basis, which is not great. The approach is usually ineffective, and it's actually quite exhausting for teams and everyone involved. There's always a time involved in terms of getting something up and running again, which is inefficient. And of course, being consistency. Consistency is a vital thing. And having a realistic and manageable budget are very important in terms of delivering effective marketing campaigns. So, is your business new or are you already established? If your business is new, then obviously marketing spend will need to be higher. You'll need to increase the awareness of your brand at the start. A business launch, for example, could require a budget as high as 30% of their first year's expected sales. And that might also be for, say, a project launch, a product launch within an existing business or a service launch. So that needs to be borne in mind. Established businesses that want to actively grow, definitely 10%, I think, is a reasonable figure. So if you apply that to your turnover, but it will also then depend on your ambition and the sector that you're in. Also consider your market share. If you've been in the business and in your sector for a long time, and you haven't seen your market share grow significantly in that period, then that could have a bearing on your decisions. If your identity needs to be more visible and will require that will require upfront investment and an ongoing regular marketing campaign to increase awareness. But even for brands that are already benefiting from sizable market shares, to maintain that market share, there will need to be a significant level of spend. And as I say, I believe that to be around about 7 to 10%. So what's really key is to define your goals. Where do you want to get your business in the next 5 years, and what do you need to get there? Now, as we go through this presentation, Matthew will launch a poll at the end, and he'll pop up a few questions which you can answer. And then, of course, that might serve as a useful means for discussion as we go forward. So what are we trying to achieve? Your marketing budget will dictate the extent of your marketing activities, obviously, and that will depend, on the market, the audience that you require, and what you're trying to achieve. Obviously, a lower marketing budget will help maintain awareness and visibility as a bare minimum, and consistently done over the year is obviously the best way of doing that. But obviously, if you're looking to higher levels of spend, that will give you the opportunity to grow and gain market share. So is marketing an investment or a cost to your business? I mean, do you see your marketing as a cost, or are you prepared to invest to help grow your business? If you want to achieve real financial growth and grow the presence in your market, you definitely need to set aside the necessary investment required to deliver it. And that is often a difficult question that we have with clients as to, the reality of actually growing a business in a very busy, competitive market. at the end of the day, you reap what you sow. So, businesses that do set aside a realistic and regular marketing spend will see consistent levels of growth. So, you do get what you put out there. Another important consideration is product life cycle, and I think this is a very important factor. Looking at your business, looking at services within your business, perhaps products that you sell, each of those products will be at a different point in this sort of timeline. So, early product development, post, some R&D work, there'll be very low market, share, but also, you're absolutely the launch point. So you go through that introductory phase, the growth phase, maturity and decline. What's really relevant here is to look at the appropriate levels of spend at each step. So, it's fair to say that, at the introductory stage, you need very high levels of investment in probably product development, but also in your marketing. But then you've got the advantage, your competition is going to be relatively low, your sales will be low and your profits will be low. But as you get into that growth phase, whilst your investment in the product might fall away, your marketing costs still need to be held up quite high, and your competition is going to slowly start to grow. So you'll see increased sales and profits, but you're getting into a more competitive market. And of course, reaching maturity, investment at that point, is probably spent. So you've got low levels required there. Your marketing needs to consider, you're up against a lot of competition, and you're really now having to compete for sales. And of course, then on the decline side, everything starts to fall away. So one of the key tricks in running a business and marketing that business effectively is to make sure that you constantly have that product life cycle running simultaneously for different products and services. It might be new venues, new openings that you have. It could be a variety of things, because you'll certainly see that life cycle. And I had the privilege, the enjoyment and the pain of seeing that in the health and fitness industry, from absolute initial product development, where we were launching huge new clubs across the UK, the growth to saturation, maturity, decline, and now the market is incredibly competitive and very, very hard to survive in. And then, of course, COVID's come along. So, every product has a life cycle, and understanding where you are on that life cycle is important. So how much should you invest in your marketing? Well, there's no simple mathematical formulas. I've given you some sort of indication, but there are other factors that you need to perhaps consider. So the maturity and the size of your business, your current share, your position in the market, and where you'd like to be perhaps with market share. Your turnover and your existing financial commitments, they obviously have a bearing, and I'm sure Ben would recognize that lots of businesses apportion certain percentages of their turnover to staff, overheads, whatever it might be, rents and other such services. Marketing is just one of those percentages. How competitive your industry is. If you're in a business where you're up on that growth curve, on that life cycle, and it's now very competitive, approaching maturity, you need to be very competitive. You need to perhaps think about innovation. And innovation doesn't have to be necessarily launch a new product. It could be provide an additional service. One of the things that we've done at Square Media is to provide a means for clients to fund projects that we're doing through a company called iWalker. And that enables them to split their payments for, say, a website project over 3 installments. Now, it doesn't sound like much, but that's been the decider for a few clients that have opted to use us rather than go perhaps with one of our competitors. So again, how much are your competitors spending on their marketing? Are you really up against an aggressive market? One thing I can relate to there, and with Matthew, we've noticed that a lot of our competitors have pulled their horns in a little bit in these current times, and their advertising is reduced quite dramatically. So with our monthly spend, we're getting far greater reach and visibility by maintaining our spend in what others are considering to be a difficult recessionary time. So I think that's the thing to really bear in mind. And as a result from that, there's plenty of leads out there. We're getting huge amounts of leads and inquiries coming in. It's just we haven't got quite so much competition. So also, how quickly do you want to grow and by how much? Well, Square Media, we're very ambitious and we're looking to grow, and double the size of the business literally year on year. And through marketing, that's what we've been able to do, and levels of innovation. So that comes down to some other factors, really. Are you a risk taker? or do you tend to take sort of more, conservative decisions? And again, there's all sorts of factors which can impact that. Do you want to market existing products, or do you want to, innovate and introduce something new? So that's a big bearing. Whether your business is, B2C, B2B, or B2C, that's a big consideration as well. And of course, really importantly, is customer value. What is the value of having a customer? What are the values of those transactions? So in other words, for your money invested, what realistically are you going to get back? And of course, do you have your marketing fundamentals in place? In a digital era that we're in right now, is your website completely up to speed? Is it fully responsive? Has it got all the functionality that you need to, to compete with your competitors, and also, satisfy your clients' needs? So briefly on turnover and financial commitments, obviously there are many calls on business finance, and your budget needs to be realistic. So it needs to be something that you can manage and you can afford. You don't want to have a situation where you've got some overspend and then you create difficulties in the business. We've had situations I'm aware of where businesses have actually overmarketed themselves and they can't deliver on the inquiries that they're getting, which is obviously quite wasteful. So managing demand to your capacity is an important thing. But equally so, if you underspend, you won't see any results. And I have to say that a good percentage of the inquiries that we get in are from people who are mystified as to why their businesses don't seem to be getting the leads they used to get. So one of the start points we offer is an SEO audit, which will help understand how visible their website is as an absolute start point. How well are they ranking for keywords? Do they have a proper focus on their keywords? And how's their Google PPC campaigns working? So, that often results, and there'll be typically a level of underspend within that sort of business. So your industry, how competitive is your industry? That will determine how your marketing needs to be set. Reaching your audience. I mean, if you're in a competitive sector and you're all over the country and you're trying to reach multiple destinations, that could be a big factor. But of course, with digital, it's now really leveled the playing field in terms of being able to help most businesses achieve that. Are you active? How active are your local and online competitors? Again, and is your marketing budget realistic? So quite often, with the initial conversation we'll have with the client, we'll look at what they're actually spending, the fact they're not getting the leads through, or their marketing's not working particularly well, and quite often that will come down to either an ad hoc nature approach to their marketing, or a lack of spend, or having the right marketing assets in the first place. How fast do you want to grow? Well, obviously businesses that are looking to grow need a higher budget, and they should make allowance for additional marketing. You have to invest more money to make more money, that's obvious. But if you take the approach of looking at it and saying for every £1 you invest, you get £10 back, that sort of thing is achievable in certain markets and certain circumstances, not for everyone, but it is achievable. Why wouldn't you invest heavily to grow your business, providing you've got the capacity, of course? So your attitude to risk is a thing I mentioned. We deal with a lot of business owners. Some of the business directors are more mature. They're perhaps less confident in digital, and that's where we can really help. But also, they will perhaps have a lower tolerance to risk. You may be willing to invest, which is a big thing. And if you do that, you'll get obviously greater rewards coming back into your business. On the other hand, if you're very cautious, you take a very cautious approach. There can be ways of marketing, on a very minimal level, just to maintain your visibility out there and hopefully sustain, a level of revenue coming through. But again, all of that needs budgeting and planning for. So products and services, obviously to market new products requires a different approach. Products and services new to the market will require a lot more investment to gain traction and marketing share. We touched on this earlier on. If you're a business or consumer, if you have business or consumer customers, typically it will cost more to market to consumers. So B2C markets, obviously there's a lot more competition. but there's also potentially much larger audience. So that will require high levels of investment and a very careful plan in place. Expensive media might be required to reach a wider audience. We're working with a proposal at the moment for a company completely new to the UK that's looking to launch a fibre service in a town they've never been anywhere near. So it is an absolute cold start for them. But but thankfully they recognise that there's very large investment required to achieve that. So this is a really important slide in my mind. What's the real value of a typical customer? So it's all very well talking about marketing and spending towards marketing, but you need to understand that there's a likely cost to attract a new customer, and that needs to be factored into every marketing budget. So have you ever looked in your business and thought, well, what is the value of a typical customer? I mean, that's not just the value of, say, the initial transaction, but the lifetime value, the value that you get from repeat purchases with that client for however long they remain a customer. And that's a really important figure. So, for example, the health clubs that we were running quite typically, these are slightly average figures from across the portfolio, but a typical monthly membership would be £50. That's £600 a year. And the average lifetime value of most gyms with relatively sort of stable demographics will be about 3 years. And I suspect that's when people get posted on to another part of the country, or they move on, or whatever happens. So there was a lifetime value there of £1,800. So how much would you spend for that custom of £1,800 over a period of time? Well, what we knew through our marketing, and it was pretty efficient, anywhere between £25 and £45, depending on the time of year, would be required to acquire a single member. And the typical average membership budget would be 100 members. So therefore, we put together budgets that were based around £2,500 to £4,500, perhaps in January. So having that budget mapped out over the year, was quite a shock for business owners that I'd worked with previously. They never thought that they would have to put down that level of money. But at the end of the day, when you come back to the lifetime value of each member coming in, it was a very sound return on investment. So a question to pose to yourself, if you could just buy a customer, how much would you actually pay? If there was a way of simply just buying a customer, how much would you pay for that customer? What would you be prepared to invest to get that customer? Of course, that depends on how much that customer is worth to you in their lifetime value. So I touched on this earlier. In recessionary times, challenging times like now, some businesses have stopped marketing, but those that don't win massive market share. And I honestly believe right now, although we're in a strange situation, there is an awful lot of intent out there for people to want to get on. And there's a lot of business owners as well that are really keen to get cracking and get started. And I think the two things, Boris Johnson's roadmap, and then I think this budget, have been two really instrumental steps in terms of getting the whole economy going. So the question really to you is, where are you trying to get to, and how ambitious are you for this year ahead? What do you need to claw back? What do you need to achieve? You probably need to put in place a budget to do that. So it's vital you understand these two figures at the bottom here. Cost of customer acquisition, how much it costs you to get a customer, and what's the lifetime value of a customer. And if you bear those two figures in mind, that will help you map out your budget for the year ahead. So obviously, what's really key within this, unlike John Wanamaker, in the old days, you would run a marketing campaign, you might have to do some market research. 3 months later, you get a report to say how effective that campaign was. Absolutely hopeless, really. But once a marketing budget has been put in place, we need to be able to monitor and measure the return on investment. So that's obviously very easy through insights and through analytics these days. And that will be important, really, because you need to know what impact did a particular marketing campaign have on sales and how much did that activity cost. And of course, all of that is measurable. If it's measurable, it's manageable. So we basically very closely monitor all our clients' activities. They get monthly reports and they get quarterly reviews as well. So that means that where adjustments are required, they're made, but performance is obviously critical to be achieved, which is really what that slide there is saying. So lots of businesses out there right now, recognize they're wanting to get ahead, they're wanting to start doing things, they're trying to get their marketing going, but there will obviously be some one-off sort of groundwork costs and what you need to put in place. And I think one of the questions that Matthew's popped up concerns that in terms of your readiness to go forward. Most businesses we come across, they simply aren't ready to market from day one, and there are going to be some requirements to put in place. That might be improvements to their website, their SEO, analytics put in place, social media profiles, graphic design, whatever. There's always a range of sort of projects to do. Is your brand proposition clearly defined? The reason why you exist, your purpose. Do you have a marketing plan? If you get a minute to answer that, that would be great. Your visual identity, down to your straightforward branding, your logos. Sorry, just trying to get that off the screen. Does your visual identity, your logo, your branding need a refresh? Is it fully modernized? Does it work well on social media? Is it effective? Is it clear? Is it engaging? Do you flatter your clients? Do you get across the personality of your business through your branding? Maybe you need a brand refresh to sort of get your launch going. Are all your your websites and your digital platforms up to date? Websites, particularly Google's push now of being mobile first, is absolutely critical. If your site's not fully responsive and works really well on smartphones and mobile devices, then you will be penalized. And that there's a lot more to that than just having a responsive setting turned on. So I can see then there's a bit of feedback coming through, and it's interesting that the majority of businesses actually that are on this webinar don't have a marketing budget set. So that's probably something to have a conversation with me later on. We can have a chat on that. We offer a free consultation at the end of this call anyway. So, lots of other elements, and all of these things are still relevant. We're partnered with a print company in Corby, Canada Print, and there's still, a very big need for things like brochures and to have printed stationery, fact sheets, product sheets, those sorts of things. It really depends on your audience, and if your customer requires and they like to consume information in a printed format, then that's what you need to provide. So don't rule out that that print is dead and it's not worth having. And again, everything, is it up to date? Is it modern looking? Your products that you sell, if you sell products, how is the packaging? Do you have really compelling packaging? Is your pricing effective? How well is it all knitted together as part of your overall marketing plan? So spending on marketing without getting the essentials, right up front could prove to be costly and time consuming in the long term. So we often have clients that start with a period of marketing consultation. That might be a 2 or 3 month consultation process, which I can do or Matt can do. And then there'll be, a necessity sometimes to put in place various marketing assets. So that's key, really, is to make sure the business is ready for market at the start of a campaign. So, brief summary then, we're nearly there. A few items that are the do list, really. Set a realistic marketing budget, one that you can commit to, that will realize your growth plans, is within your budgets and your capacity to deliver. Be consistent. Whatever you do, make sure you're consistent over the year and you work to a plan. And it's better to do a little often than to do a massive amount on a one-off ad hoc basis. Be patient. The worst number in marketing is 1. People try one advert once and it doesn't seem to work, and they think, oh, that didn't work. Marketing takes time, and it takes time for people to see things, to get to know you, get to like you, get to trust you. And it might take 10, 15, who knows, impressions of a particular logo before they even start to respond. So you have to be consistent, have faith, and stick with the plan. Definite things not to do. Never set budgets with, well, we've got this left in the pot, what can we do with it? That happens a lot, I know. Certainly don't stop marketing. If the situation is a little bit scary at the moment and people are thinking, it's an easy cost just to cut, don't do it. keep some marketing going. Make sure that you maintain your place in the market there and you're visible. And certainly don't bury your heads in the sand, because that's the worst thing of all, is just to think, well, it's all too confusing. Digital marketing is very complicated. I don't really understand it anyway. And we'll just carry on as we have been doing, because it's a bit like jumping into a flowing river and stopping swimming. You'll just be washed away. Really important not to bury your head in the sand. Have a chat with us. We can help you put something together, and we can help make a plan. So marketing is an investment. Don't view it as a cost. Marketing gives you leverage. If you look at this little sentence here, I think this is really, really important. Time is finite. There's only so much time in your day. Money is potentially infinite. So you can always find money, but you can't find time. So automate what you can and delegate what you can't. If you don't have a marketing team, Square Media does exactly that for our clients. But if you have a team and you've got people within your team, delegate what you can and get them trained up to do what they need to do. Marketing amplifies your communication and it increases your reach. Also think about this, segment your customer base down and really try to niche out your market. So, the more focused you become on a particular niche, the better response you're going to get from your marketing spend. Always try and look for a niche that's like an inch wide and a mile deep. In other words, work those vertical markets and really capitalize on your skills and your strengths. Being a specialist, of course, makes you more valuable. And when there's value in your proposition, then price becomes an irrelevant factor. So, as I mentioned earlier on, I'd be delighted to offer you a free 30-minute consultation. You can book through following the link. You can either scan the QR code. We'll also send out an email with the presentation, and there'll be a link in that which you can just book onto. Most of our clients start that way. It's a 30-minute consultation call. Some, they won't be ready right now, but that's just an obvious start point. It's the best thing I think we can offer you right here and now. There we are. Thank you very much.
Thanks, Steve. Thank you for that. Ben, if you're there, if you want to join back up, you should be able to.
Do you want me to stop the share?
It's all right. You can leave that up on the screen. We've got some questions that have come in, so I will. I'll look to go through those once Ben joins us.
So I've just, I'm here, but I can't show my video. I can show my video. I am back.
Excellent.
He's back on the beach.
Thanks a lot, Ben. Yeah, thank you for that, Steve. Some really, really good points in there, and thanks also, Ben, for your overview at the start. I'll start by just reiterating. Ben and Steve's contact details are on the screen at the moment now. If you haven't already, please feel free to drop them over an email or give them a buzz today. I think both of them have got diaries available, time available today to take any questions or calls. But I know there's been a couple of questions that have come in. So one of the questions asked during Ben's presentation was from John Kellett. And he asks, as a micro SME working from home, as the sole director of a limited company not paying rates, are there any grants to help a business recover from COVID? All I need is workload, as all the hospitality and retail sectors, the sectors in which some of our clients operate, have had projects delayed and cancelled. The bounce back loan was a godsend, but it was only a loan, and the length of lockdown has now exhausted it. So I think in summary, are there any grants available for sole traders or small limited companies to help them get back on their feet?
There are grants available. I think John mentioned in his second question that he's based in Kettering. So the best course of action for John would be to contact Kettering Borough Council. The grant programs change. It's a really fast moving landscape, and it's one of those things that the rules change quite regularly. So it's very difficult for us to kind of keep on touch with Northampton, Corby, Kettering, and all that sort of stuff. So it's based on a local authority basis. It would be well worth looking at the Kettering Borough Council website, and also having a look at the newsletter. You get our newsletters. Claire Elsby often keeps things updated with regards to the grants that are available at any one time in that respect. So I think there are grants, or at least there have been grants available. It's just a case of checking what's available at any one time. It is very changing all the time. So have a look at the newsletters if you've been getting them. If you haven't, let me know and I'll get some sent over for you.
Yeah, and I think John's actually put a bit of further information in the question box. So if perhaps Steve, Ben, you can just reach out to John and just offer a phone call just to discuss that. Some other questions then. Ben, the super reduction, is that available on electric cars?
It is. So electric cars you can buy after the 1st of April. And it is available as a super deduction, so you get 130% of the cost. For example, if you bought a Tesla at whatever value that is, 50 grand, 60 grand, and put it on HP, although you would be paying over a 3, 4, 5 year period, you would get that enhanced super deduction with effect from when you bought it.
Excellent. Okay. And given the current rule changes, are you still better to take as a limited company director a salary or dividends, or has the combination changed based on previous tax years? Is the situation the same?
Yeah, so it will change. It will probably squeeze the benefits slightly, and it all depends on the personal circumstances again to what they're willing to achieve. So if someone's income is still within the basic rate band, at least for the short term, it'll still be beneficial. It might then be worth reviewing that depending on what the tax structure is of the limited company as they're trading, as they're making more profit, and how that marginal relief works. There's other things. For example, if you're doing it might then be worth paying a higher salary, and are people able to claim the employer's allowance? So there's a lot of different factors. The short answer is it is still, but it's one of those things that we just need to have a chat through. It's a very unique circumstance on a person by person basis.
Yeah, and I think that's generally the best way to approach these things is to have a conversation about your unique circumstances, isn't it? Because I know you can't apply the same advice to everybody, because everybody has different personal circumstances, houses, partners, children, work in industry. So all of these things have a bearing, I suppose.
Yeah,
Steve, a couple of questions for you. Is direct mail and newspaper advertising a thing of the past, in your opinion?
No, not at all. It's obviously a market that's kind of shrunk somewhat because of other means. But when you think about marketing, you think about your customer, you think about your client, and what's the best route to communicate with them. So there are still sections of the market who will regularly read local publications. There are industry people who will read trade press. There's a business community out there that still read printed publications. So publications I think still have a relevant place, but obviously it depends on the market that you're in, and particularly direct mail. I mean, I think one of the advantages with direct mail right now is that there's so little other direct mail going out. You can dominate that market by having your mailing going in. So again, it should never be one thing. If you combine direct mail with other elements such as email or digital social, then it will still work. So it's still a relevant thing. And I think having something physical, something to send out to somebody, is actually really quite engaging in a time when you don't tend to see things. So I like lumpy mail as an idea. And you receive an envelope and it's got some sort of promotional item inside it. People are intrigued to open it. So you just got to be a bit more creative in terms of how you use it.
Yeah, exactly. And I think what it boils down to is to really think about marketing as being a truly multi-channel thing. You shouldn't silo all of your efforts into one specific channel. You should try and run a campaign across multiple mediums at the same time, and that's how you can make a campaign really, really effective. One of the questions is, do I need a website? I've got a big following on social media and I just market through that at the moment. What's the benefit? What's the extra benefit of having a website?
Well, the social media channels, you don't own that channel. That's someone else's website, and you're posting content onto it and you're communicating to their audience through it. So yes, very effective means of communication, of creating a conversation. But the way to view a website is to look at it as your asset. It's like your shop front. It's something that you own, you're in control of. You can determine the style, the functionality, the offers, the promotion, the complete look and feel and personality of your business can be maintained through that. Anyone that's been on Facebook for the last 2, 3, 4 years will have seen that many changes and updates and functionality and methods of working and everything else. If you're purely reliant on something like Facebook, it will be good for you, but your hands, you're in somebody else's hands completely. So view your website as your home base. That's your central pillar to your marketing. Social media things should branch off it. No, definitely have a website. And I think also,
yeah. So what I'd sort of say there is that everything we do in digital marketing and also offline marketing ultimately results in people wanting to find you, and your website is sort of focal to that. So whether you run a print campaign or an advertising campaign on social media or email marketing or anything else, people have developed the behavior of going to Google and searching for a business, and even if they get something in the post, the chances are they're going to go to Google and then they're going to put your business name into Google and they're going to find you that way. So the experience they have on your website really needs to reflect what you're all about as a business, and it needs to sell you. It's your brochure online, and there are clients that come to us that have a very basic website, and there's clients that have websites that they've invested tens of thousands of pounds in. And I think it really needs to. It depends on your circumstances, doesn't it, as to what level of investment is actually required in the website and what purpose it's going to serve for your business, isn't it?
Yeah, I think two important things. Who's the most important visitor to that site that you can get onto that site, and then the functionality you can build into your own website is literally limitless. So the second question then is, what do you want them to do when they're on that website? So they can do that through your website and get a full immersive experience. Through social media, they're also going to be bombarded by your competitors, of course, which is not also always necessarily the best thing. Yeah. So a website is, I think, a critical thing in this day and age. People expect to find you online. They expect to be able to use a mobile device to fully engage with you, and it needs to be obvious to them what you want them to do and what value they can get out of going on that website. So be that download something or call you directly or buy something, whatever it might be, you have to have a clear strategy to how you use your website.
Yeah, and actually there's another question just coming from Lee, which you can answer, Steve. So he's asked, would you include sponsorship costs as part of an overall marketing budget?
I would. And, traditionally, if you go to sort of die-hard marketeers, they look at sort of above the line and below the line and they break everything down. Sponsorship is a marketing message at the end of the day. It's visibility for your brand. It's particularly association with a particular audience that you want to reach. So if you are getting advertising in the right location and the fit is correct to you, then that will generate awareness. Don't expect to generate huge response or huge results, but what you're actually achieving through doing that sponsorship is basically getting that visibility. You're owning that space, and you're in the right audience for your for your marketing. So if you look at some of the bigger events around the country and how they position their brand, such as we've been looking at this Burley horse trials and how Land Rover are the headline sponsor there, absolutely perfect. The audience to that event are largely the sort of barber jacket and Green Welly Brigade, obviously the horsing market, farmers, all those sorts of people. So it's a perfect fit. So no, it will form part of their marketing budget, I'm sure.
Yeah, absolutely. And I think whenever you approach sponsorship, you need to remember that it is marketing. You're investing in marketing. And I know, lots of business owners will, for example, sponsor their local football team or their local junior football team or things like that. And I think, there's two elements to it. There's the blatant marketing part, which is where you really need to identify if you've got a £10,000 budget in a year to spend on sponsorship, you need to put that £10,000 into the right place where your audience are actually going to see your sponsorship. So if you've looked at your audience profile and you've worked out that actually predominantly they're interested in rugby, and you've really developed your customer profile, that would make logical sense then to sponsor a rugby team. But actually, if your audience are more interested in motorsport, then you might want to consider sponsoring a motorsport team. And I think it's all common sense stuff. But the other side of it is the ethics of the brand, and sponsoring local charities and developing that local community message. That's where sponsorship can be quite powerful as well. That might not be your direct audience, but it does allow you to develop a story for your brand, and a personality for the brand. And I think that can't be undervalued either, but that's much more on the awareness side.
But very much so. And lots of businesses these days get huge PR benefit out of having the sort of corporate social responsibility box ticked. So very often they'll do things. The approach we've had from this large company to go to Stanford has been they think global, they act local. It's kind of one of their mantras. So part of what they're expecting us to be able to find is sponsorship opportunities, some of which will be down to things like youth clubs and football clubs. So they'll have the PR benefit of talking about what they do, but of course, because their service can be, you can envisage how that benefits anyone really. They're into fibre. That would be beneficial to them.
Excellent. And sorry, there's a couple more questions for Ben. So Ben, is there anything in the budget for landlords?
No, which has probably been a good thing, because they got heavily hit over the last 2 or 3 years with various interest rate restrictions and stamp duty and the various other things. So no is the answer. There is still some very good tax planning available for anybody with a portfolio looking to move the portfolio into a corporate structure to sort of circumventilate the interest charges. But no, there wasn't. So as much as I want to say that's bad, I think it was probably a good thing, because it was anticipated CGT would go up. That's not to say it won't, but no, there wasn't anything in there.
And I'll just there's one more question, but I'll just give a shout out for anybody else. If you've got a question, please put it in. We've probably got time for another couple of questions. So one more question for you, Ben. Are the grants taxable? The grants that businesses have already received this year or will receive?
Yeah, so all of the furlough income that a business has received, all of the grants self-employed have received, any grants you've received from the local council are all taxable on receipt. So when you receive it, it's deemed to be taxable in that period. So be careful not to obviously spend it all, because it will give rise to a tax charge at some point. The job retention scheme isn't so bad, because the money obviously comes in and you use that money to pay a wage bill. So the net impact there is typically zero. But things like grants from the local authority, particularly for the hospitality people, if it overprops up the business, you could end up with a tax bill that perhaps you weren't expecting. So worth bearing that in mind, and making sure you're comfortable with what might be due as a result of the grant.
Okay, excellent. I don't think we've had any other questions come in. I think we've answered most. Oh, sorry, there's one more. Sorry. Lee was just clarifying a bit more information about the sponsorship question. So by all means, if you want to have a conversation around that with Steve, his number and email address are on the screen. So do get in touch with him, and I'm sure he can flesh it out with you and give you some advice. That's all from me. I don't know if you gents have anything else to add.
No, I'm just happy to help anybody who needs some guidance, anybody who just wants to chat. Happy to help. It's been a pleasure. Thank you for inviting me to be a part of this. I've really enjoyed the process, really enjoyed working with yourself and Steve. So really, yeah, thank you very much for that.
Yeah, thanks.
No, thanks everyone for the time. Very good.
It's been brilliant. Thank you guys. Take care, everybody.
Take care. Thank you very much.
Cheers.
Bye-bye.
Thanks.
Bye.